What's going on, traders? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is May 10th, 2021. Please click the like button on this video and subscribe to my channel if you enjoyed this content, and I will continue to make it for you. Today we're going to talk about the price action in the indices. We'll go under the hood and check out our sectors and style factors. We're going to go through everything. Today was a really wild day in the financial markets. We keep having this tale of two tapes where the value names are doing well, the tech and higher beta growth names are just getting crushed. So we're going to go through all that. We're going to go through some of my trades for the day, and we'll wrap up with our options order flow. Before we jump in, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump into it. Let's jump into this bloodbath. So box scores for today. We had the S&P 500 close down 0.99%. We had the NASDAQ QQQ finish down 2.53%. We had the IWM small caps finish down 2.54%. And we had the Dow Jones close down just 0.04%. So to set the stage for today, over the weekend we got news that the Colonial pipeline, big energy company in the United States, was hacked. And apparently, I think as of now, they're linking it to some Russian hacking group. But it essentially cut off a large part of the United States energy supply. So when I saw those headlines come out and that story really developing, I sort of knew that, at least for my positioning, I was essentially going to be trapped like a rat today. That's, given how I was exposed coming in. We'll talk about that in a minute or so. Yeah, you can see S&P 500. You can see the S&P 500 right here. After market, you can see we're down 1.17%. And, we pierced through this monthly value area. And we actually pulled down almost to this 20-day simple moving average and almost to this monthly point of control. So that's definitely a bit of a buzzkill when you have, oh my gosh, awesome, a breakout above the monthly value area. And then all of a sudden you get this. And what I noticed right off the bat, everyone now is very concerned about inflation. And it's like, oh my gosh, every day we keep seeing these headlines and these stories about iron ore just ripping, lumber ripping, all these different base metals ripping, cryptos ripping. So there's so many different indications of inflation in the system. And I think everyone knows if we start to get runaway inflation, the Federal Reserve is going to have to either A, stop printing money as quickly, or B, raise interest rates. Or C, they could do nothing and just let it all happen. I mean, maybe they do that too. That definitely could happen. But it's sort of like, with this game of monetary policy, the Federal Reserve has been able to just continue. More QE. Economy starts slowing. Okay, we'll do more, we'll do more, we'll do more. Now we're at a point where we're doing, direct payments to U.S. citizens. We're doing $120 billion a month of QE. And now it's almost like this inflation genie has come out of the bottle. And once it comes out of the bottle, it's very tough. You can't just make it disappear. A lot of times, you have to do something about it. So we already had, this fear of inflation and signs that inflation is really mounting. And then when we had this energy pipeline hack over the weekend that cut off the supply, all of a sudden that's like, okay, now we have an energy shortage. That is potentially another source of inflation and really another catalyst just to stoke those fears. So yeah, if we look up really quick before we go to the NASDAQ, the NASDAQ was really the story for today. We actually closed as well within this weekly value area. This is our hourly chart. We closed below this 200 period moving average, and now we are resting right by this weekly point of control at around 4170. So for tomorrow's trading session, that's a level I will definitely be watching. This 4170 level, does this support hold, or do we break below that and start to, make the fast track to 4140? Let's go to our NASDAQ, because that's really where a lot of this stress originated. So yeah, you can see NASDAQ right off the open, it was pretty weak. And what I noticed was just like all these mega cap tech names. Last week, it was like, okay, maybe they're a bit oversold. We already got that big inflation scare. And then, the events this weekend really just reignited all of it. So you can see we had a nice bounce in the NQ, but then, we just rolled right over. We rejected this monthly value area low. And, very weak close. We actually closed below this 50-day moving average. And as you can see, we made a new swing low here. So now what we're looking at is, okay, we have this high up here, and then we made this low, then we made a lower high, and now we made a lower low. So, if you check back, like this was when we had that prior instance of NASDAQ weakness. I remember trading this and it was so choppy and it was like, oh my gosh, we're going nowhere fast. And then we got this follow through day right here where it was like, all right, we firmly broke out, awesome. Then we had this nice run. Now it's like we've come full circle. And you can see we actually closed slightly below, or maybe just like at the same exact level as that breakout candle. So it's definitely just not a good look in terms of the technical structure here. Now we're below all the key moving averages as well. And if we go to this hourly chart, yeah, we're below this weekly value area as well. So the NASDAQ, no matter which way you slice it, it's just not looking great. It looks really bad actually. Russell has been just range bound for months and months and months. Every time it looks like it's going to break out, false breakout. Every time it looks like it's going to break down, false breakdown. But you can see here, we sliced through this monthly value area in one fell swoop. And there was no dip buying that usually happens. So this is not looking too hot for the Russell either. On the hourly chart, yeah, you can see we're below this weekly value area as well. The Dow Jones has been the bright spot for the market because what has been performing well is anything that can be considered an inflation hedge. So like the financials have been doing really well, industrials, basic materials, all those kinds of names. And the Dow Jones is more concentrated in those names than the other indices. So looking at the Dow, we had a really nice run here. We actually tagged this R1 pivot level at 35,000, but then we came off of that level. And you can see we put in this like little hammer candle, and we closed, very close to the low of the day. So Dow Jones definitely looking the best, but this to me looks like some exhaustion here. And then we should be above, the weekly value area for the Dow Jones. Yeah, we still are. So yeah, we're starting to see a little bit of weakness in the market. And to me, now let's pull up. We're going to go under the hood. We'll look at our market breadth. And throughout the day, the market breadth is actually very strong. So at one point in the day, we had like 380 S&P 500 advancers. But it really deteriorated throughout the day. Checking out our heat map, this was what I saw in the morning. So, in the morning, last week we got that big inflation scare. It looked like we got our big shakeout. And so I was like, I'm going to, buy the dip in some of these tech names or whatever. And just given that, sharp move we've had in the inflation names, I'll add some other areas of the market. As I said earlier, once we got news about that hack, energy shortage, I just knew that any paranoia that was being felt about, oh my gosh, the Fed's going to have to do something about this, I knew that was really going to accelerate. And once we hit this point of, right now the Federal Reserve is saying, hey, this is transitory, it's going to pass. And I honestly think they are just hoping and wishing that it passes. They're sort of like taking a gamble by doing this, because if it's not transitory and then they have to do something about it, that's going to be a very bad look. The financial markets would absolutely hate that if all of a sudden it came out, we're doing a rate hike now, or okay, now we're going to pump the brakes on QE. That's not going to go over well whatsoever. And to me, really my thought process was we are one step closer to that. Now that it's like, okay, now we have this energy shortage. I think all the algos were kind of in the same boat that I was, where all of a sudden, like, everybody had to dump their tech exposure. Because the tech exposure, it's typically thought of as like a long duration asset. So typically you'll have these mega cap tech names perform really well when treasuries are performing well and when the economy is slowing. See, I saw right from the open, all these were really dumping. And I actually closed out a bunch of my long positions essentially right off the open. You can see there were other areas that were strong. This deteriorated throughout the day. But you can see the consumer defensives very strong. Utilities, industrials as well. So it's not like it was all weak, but a lot of the stocks that really matter were down huge. Like Tesla, for instance, down over 6.5%, or about 6.5%. Looking at our sectors, this also deteriorated throughout the day, but our best performing sector was utilities. So really, what does that tell you? Utilities are the best. It's pretty risk off. And then you can see some of these areas really got killed. ARK got destroyed. ARK-G was destroyed. ARK-W, the blockchain fund. All of the semiconductors destroyed. So yeah, depending on which areas of the market you were in today, you would have had a completely different outcome. So yeah, really poor price action for those sectors. Style factors. Yeah, you can see this was one thing that I noticed as well. So for our style factors, the high div low vol was the outperformer for the entire day. So even in the morning when the market was kind of teeter-tottering, like around flat, and it was going up a little bit and down, I noticed this style factor configuration was, this is very risk off. What's going on here? Then you can see our worst performing style factor was momentum, down 2.54%. But really, there was a lot of carnage today. So like I was saying, ARK, look at this. Down over 5%. And now we have this version point of control ahead at 100. I would imagine, now we're pretty close. We're likely going to tag that VPOC at 100. This name, the Trade Desk, reported earnings. Look at this thing. They must have had a disappointing report, but this was a name that was really a darling. It's a digital advertising company, and the market just slaughtered it, down 25.98%. And when you start seeing those reactions, like, oh my gosh, the market just is looking for any excuse to sell these names anyway, and then this thing comes out with a bad report, so there's literally no one bidding it at all, that's where you can get moves like this, where it's just game over. If you were in it, you're down 26% or whatever. So yeah, really crazy. So we had TTD. Now let's take a look here. Yeah, a lot of really quick movers. Let's pull up here. So my trades for the day. And like I said, when I saw really that headline, and then I saw the style factors, I saw the VVIX today as well was giving a signal. You can see we closed up pretty close to the highs today. We're above all those key moving averages on the VVIX. That for me was like, I'm trapped. I need to stop out of positions. So I went from maybe like 15 or 20 longs. I closed out almost all of them today. And the good thing, I hate stopping out of positions and having to like capitulate. One thing was like, I didn't know that catalyst was going to occur with the hack, the energy hack or whatever. So I knew, I was like, okay, let me just fix this. Let me stop out of these positions. So I had some Q's calls that I took Friday. I stopped out of those at 9:34. So this was really like within the first like minute or two of trading, I was like, tech's not going to work today. So I'm getting out of everything related to tech. So I stopped out of, I had a Tesla call spread. Stopped out of that. I had some XLK calls from a while back. Twitter diagonal call spread, pen calls. So yeah, all of those options, I was like, this environment's not really conducive for for me to have those exposures. And the crazy thing was, like, on Friday, it looked like, oh, okay, this is a conducive environment for me to be long, for me to be aggressively long. But yeah, things changed very quickly. So I took a bunch of stops today very early in the morning. Like I said, I never like taking stops, but I'm glad that I actually did it early in the morning. That way when the market really started to sell, at that point I didn't have much on. I also took a target on my Lennar calendar spread for a nice winner. I took a target. I had some XLU calls. Took that one as well. I had some EEM that I stopped out of. I had a block call spread I stopped out of. And then towards the later stages of the day, I took some puts actually. So I was like, okay, I'm flipping out of these longs, from very early in the morning. And then as the price action continued to develop, I took these puts at 153, and I got lucky before the market really started to sell off. These are SPY puts, and then, there's actually a lot to copy and paste here. So this is a continuation. And then really into the close, I took some Qs puts, because with the way that we closed, this looks like the puking is going to continue tomorrow. And because we closed like literally on the lows. A lot of times you do get some follow through the next day. So at this point, I'm buckled up. I'm well prepared in case we get more volatility. And then for my stock trades, I also trimmed these up quite a bit as well. So I had some Playboy. I closed that out for $49.70. I'd paid $48.39. It reports earnings in a couple days, so I was like, okay, Playboy, let me just pull that in. I closed the remaining half of my CCJ at $19.40. I'd paid $17.39. Actually, I want to see how CCJ closed. That's a uranium name. Yeah, it closed down 2.14%. This actually still looks pretty good. But I took that one off just to pull the risk off. IVOL, this was on our weekend watch list for Pristine Capital members. This, it can serve as a pretty good inflation hedge. I actually really like this one as a hedge. So I put this one on, just as a substitution for a lot of those other things that I was long. This one pays a pretty good dividend yield. And you can see it's pretty close to a breakout. So took that. I closed the remainder of my Ethereum. This is the Ethereum Trust. I had paid $22.31 for this trust, literally like a couple weeks ago. And I closed out for $39.65. Ethereum has just been on a tear. There's no ifs, ands, or buts about it. Look at this. So Ethereum, this thing's gone parabolic. I was entering it right in these candles down here and really just buying the dip around like 2,200 or 2,300. This thing got all the way up to 4,240 today. And this, at this point, for me, it's like I'm not going to be greedy. I'll take a winner. And, if I get an opportunity to buy back it later, that'd be great. So I took my Ethereum off. And then what else here? Got long IVOL, took off my Ethereum. I tried some of this Floor and Decor, which is a setup I also had on the weekend watch list, FND. So I was like, okay, this is some more inflationary exposure. Let me try this one. It broke out about midway through the day. This one, it just wasn't holding the gains. I closed this one out. Stopped out very quickly. I entered that one for 114.71. Stopped out at 113.2. Because especially, when I'm of the mindset that the market could really be in trouble, I'm not going to waste my time on that. And then the only position I stuck with that I added was CrowdStrike. This one, leading cybersecurity name. And what I noticed was like all these other growth stocks were getting monkey hammered. And CrowdStrike was really fighting today to stay green. At one point it was green, kind of kept, going back and forth. So I think there's some fight in here. I also like that it did not make a lower low from right here. So you kind of have like this potential double bottom going on right here. And I imagine that when this selling and the high growth stops, I think CrowdStrike will likely be one of the first names to really start moving. So we'll see. But in terms of my outlook for moving forward, that's about my, those are my trades for the day. So by the end of the day, I'm actually slightly net short the market. So for me, it's like, okay, I came into the day positioning correctly. So I had to rectify that in the morning. And then, from there, it seemed appropriate to add some puts into the close. We'll see how that plays out tomorrow. But, yeah, this is a clean break of value. It's a bearish engulfing. And I think it's one of those things where when you think through the mental exercise, it's like, look at these areas that have been performing. This is going to be a little bit longer, but that's okay. So, I know a lot of people are of the mindset where it's like, well, maybe tech's just not going to lead us anymore, but these other areas will. Well, like financials are very extended. I have some puts on the financials. If you look at the weekly chart, they've been running and running and running. Home builders, which is another area that's been very strong. I do have a position in Lennar, but yeah, this group also very extended. XLI extended. A lot of these commodity names are as well. So it's like, can we really have a market where Apple, Microsoft, Google, and Amazon are just getting taken to the woodshed every day, but we have like JP Morgan and Bank of America just like leading us to new heights consistently? Like, I don't really think so. And as this inflation narrative continues, I think, the Fed is sort of, it's not like they can really do more. So really difficult scenario. I think the market's going to have to work it out. We'll see. But let's take a quick look at this order flow. And yeah, let's take a look. So we had a lot of put activity for Tesla and ARK. Those, it's sort of like the blood's in the water at this point. There's no momentum in those. They're downtrending. And, people, rightfully so, they're loading up on puts and really they're driving these down. So the momentum is just completely flipped. You can see a lot of call activity for CrowdStrike around 11. And it just makes sense given that the hack that occurred over the weekend, there's going to be a lot of companies out there that they go, man, if we got hacked like that, we'd be done for. We need to invest more heavily in our cybersecurity. And then you can see more ARK, Pinterest up here. Sono, this name, I believe they reported earnings as well. Someone was buying calls. But this name too, also just got destroyed. This has been a really strong name as well, but, just absolutely destroyed. So for tomorrow's trading session, I want to be ready for some more volatility. We'll see if there's any opportunities that present themselves tomorrow. But I feel more comfortable now being like, okay, I have some hedges on. I've raised some cash. I have that iVol ETF. I'm no longer like off balance. So that being said, that about does it for this market recap video. Hope you all had an awesome trading day, and I will see you all tomorrow.